If you're waiting for the housing market to cool off, you're going to need to wait a little bit longer. Investor Beat starts now. Thanks for watching. I'm Chris Hill. Another roller coaster day on Wall Street. We saw losses in the morning after Japan's Nikkei index fell 7% overnight, but the Dow regained its footing, thanks in large part to Hewlett-Packard. More on that in a minute. But joining me in studio today, Charlie Travers and James Early. Guys, our top story, as the latest batch of data indicates, the housing boom keeps rolling along. New home sales up 2.3% in April, and the median price for a new home rose nearly 15% year over year. How real is this recovery?
Yeah, it's real so far, yeah. Numbers. You know, the housing market, Chris, has always had an I'll show you mine if you show me yours kind of vibe to it, and we're doing more showing these days, which is good for the economy. New home sales are up substantially, almost twice as much over last year. And these are real homes being sold, not just the foreclosed cracked-ins or whatever. These are expensive, I think 750,000 and up homes were 46% higher. So this is meaningful. The question is, will it subsist? Will it maintain?
And if you're an investor and you're looking at home builders, we got Toll Brothers around an all-time high. Is that the way to play it if you're an investor?
I think so, Chris. And you're finally starting to see some good numbers out of Pulte and Toll. For years, they were showing losses, and they've turned the corner here. What I liked in the last Toll Brothers call is they said they can finally start raising prices without worrying about crimping demand. To me, that says the market's booming.
And of course, if you want to play it another way, you can look at the home improvement stocks. We talked about them earlier in the week. Home Depot and Lowe's both hitting new all-time highs.
Yeah, if you're a little more chicken like I would be, I wouldn't go pure play. Home Depot and Lowe's give you a little bit more insulation over the, not literally, well, literally too, I guess, but Home Depot has done twice as well as Lowe's has over the past 5 years. They've just focused more on customer service, on lowering prices, just incrementally being a little bit better, and that's what happened with the recent earnings, but they're both pretty solid companies for the long term.
Hewlett-Packard CEO Meg Whitman says you can feel the turnaround taking place at HP. The stock was up big today on second quarter results. Profit fell 32%, but that was still better than expected. How good was this quarter?
I don't know if I'd put the word good on it. The stock has certainly been good. Stock's turning around faster than the company itself. They're showing double-digit losses. A lot of that's due to poor performance out of notebooks and PCs. We know that's been a weak spot overall for the industry. HP is the number one provider. They're certainly feeling the pinch. But there are signs that the cost-cutting there is paying off. Cash flow remains strong, surprisingly so, and I think that's why the stock is up so much today.
What's the end game though for HP? I mean, every time I look to figure out what they do, it's like 8 different things, and I can't remember them all. I mean, what do they do that's substantially better than the next guy?
I think it's like we provide services and solutions kind of stuff that makes
enterprise
it a little
solution
confusing.
And whatever the heck that is, yeah.
So I think the data center management, the information that companies collect about their customers, security, I think that's a big one for them, and corporate tablets is uncharted waters for them as well. So there's a lot of opportunity.
To what Charlie said about cost cutting, whether it's HP or any company that you watch closely, how important is that to you? Because that's obviously something that works in the short term, but that's not a long-term strategy.
Yeah, for HP, it's what they need right now because they were out of control before. The question is, once they're back into control, are they still something that somebody actually wants? I think that's the next question.
You mentioned the stock turning around faster than the company. It's at a new 52-week high. What do you think of the shares right now?
I think it's actually surprisingly attractive if you believe in the turnaround story. It's only at about 6 times cash flow for the year. It was very pessimistic by the market still.
All right, that's going to do it for Thursday. Let's look ahead to the rest of the week. James, what's a stock you've got on your radar?
Chris, for the first time in a while, Apple is a stock that you don't have to be a believer to buy and make money on. I personally think. I'm not like, I have a lot of Apple, but I'm not like a massive fanboy kind of guy. And Tim Cook has been very mature. He's a little bit more boring than Steve Jobs, but he's implemented a solid dividend policy, solid capital budgeting, and I like it for that reason.
Charlie, what about you?
Well, I'm not ready to buy Yum Brands quite at this price, but it's certainly one I'm watching given the troubles they're having in China. In April, KFC same-store sales were down 30-something% in China, which is a market that gives them half of their profits overall. We'll see what they say about May sales in June.
Would you eat Yum in China right now, KFC?
Absolutely. I'm not at all worried about bird flu. I just don't see you getting infected at a restaurant.
And you?
I don't need that anyway, so I wouldn't.
You're fine. All right, for Charlie Travers and James Early, I'm Chris Hill. Thanks for watching. We'll see you next week.
People on the show may have interests in the stocks they talk about. and the Motley Fool may have formal recommendations for or against. Don't buy or sell stocks based solely on what you hear.